Hello, everyone. Welcome to our weekend analysis here. I hope you had all a great week, a profitable week at that. And right now, we are about to enter the weekend. Markets are closed, and that means it's time for our analysis. But before we get right into it, just a quick reminder, we have a promo running that is the Instant Pro, where you get 30% off using the promo code PRO30, and the Instant Prime, where you get 35% off using the promo code PRIME35, and lastly, the Instant Classic, where you get 40% off using the promo code CLASSIC40, the Instant Plus, where you get 35% off using the promo code PLUS35, the Instant Light, where you get 30% off using the promo code Light30, and last but not the least, Challenges accounts, where you get 25% off using the promo code Challenges25. The offer ends on the 14th of June at 11:59 p.m. CET, so make sure you grab yourself an account before this promo ends. So without further ado, let's jump right into your analysis and see what we can expect for next week. So start first with the dollar index. The dollar index hasn't had mad movement this week. We literally have been just moving sideways. This is usually where the market just has a cool down. So from here, it either has a decision to pull back strongly and weaken against all other currencies, or it pushes all up to the target of 101, and we are hoping that it reaches 101 and continued dollar strength for the rest of the week. Then let's look at euro dollar. Euro dollar did reach the target of 1.1500, so that's great. And so what is next here? Well, it's the same scenario with the dollar index. It's either we are gonna break to the upside or break to the downside. So right now, what we can expect is literally a consolidation, a continued consolidation. So once we have a break to the upside, then we could be looking to buy. That if we have a break to the downside, we'll be looking to sell. So this is what we can anticipate for next week with the dollar. Then we can be looking to aim for this previous resistance level, and this can be a nice 2-1. And let's look over at dollar yen. Dollar yen, we were shy just a little bit at 1.6620, but overall we are getting there. We are targeting this resistance level here, but this move has been great going to the upside. There's no two words about it. We're almost there. Hopefully, even the sentiment says it all. So we will be up there real soon. So let us be ready for that. Probably next week could be our time. Then pound yen. Pound yen hasn't been really doing much lately. We had our entry right here to go short, and then we just consolidated for a little bit here. So we're still waiting for the market to push further down, and possibly we could be touching 210 real soon. The dollar Mexican. So dollar Mexican was strong, but then it decided to pull back this week, unfortunately. So we are hoping this can recover back up. If not, then we might be seeing ourselves hit the stop loss at around 1712. Then CAD Swiss. CAD Swiss, we have literally been in a 50-50 mode here. We were looking to come to all the way up to touch this resistance, and we had fallen short of that. And right now, we're back to the entry point, almost to the entry point, but in a slight loss. And we're hoping that this does reverse back up. So probably next week we could be looking to make a new high. If we go past our entry point, then we possibly have more room to the upside. So that is what we're anticipating next week with CAD Swiss. Then pound dollar. Pound dollar we are still en route to the downside. We haven't had much movement. We had like a pullback into this area, which was our entry. Then we consolidated. Then we pushed down strongly to the downside. Then we're back up, and then we seem to have consolidated again. So maybe we might push to the downside as well next week. If we do make a new low below here, then possibly this drop may continue on pound dollar. Then gold, we were very close to take profit, but then it decided to pull back here. So for most of you, if you did get out, great. If not, then there's still a possibility we might come down. Just we need to wait on the market to decide. We are literally at a crossroads here. So it's either we're going to come all the way down or push all the way up. But of course, moving to break even would be also ideal to protect whatever profits you made as well, possibly even moving to the previous resistance level. And then from there, we might either hit that or continue all the way down. But we are hoping that this continues all the way down to 4,000 per ounce for gold. Then NAS 100. So NAS 100, we had an entry here. It pushed past our entry. That's when it started to move up. The market sometimes is like this. And we were aiming for 30 to 1, but we got stopped out a bit too early. So next week, we might possibly be looking for an entry somewhere around here with a low stop loss, probably right there. And then our target could be the previous high around 3,800, and this could be a nice 1.8 to 1. Then let's look at Bitcoin. So Bitcoin is still pushing nicely to the downside. We just consolidated this week and had a bit of recovery from 60,000. So possibly next week, maybe we may continue with the downward pressure move. Then Ethereum, almost the same thing, moving sideways. We're come down 1,200 for one Ethereum as well. So this is where we conclude with our, and hope you enjoyed it. And once more, don't forget we have the Instant Pro 30% off with the promo code PRO30. We have the Instant Prime 35% off with the promo code PRIME35. And then we have the Instant Classic 40% off with the promo code Classic40. We also have the Instant Plus 35% off with the promo code Plus35. We also have Instant Light 30% off with the promo code Light30. And lastly, we have the Challenges account with the promo code Challenges25, where you get 25% off. Don't forget, this ends on Sunday at 11:59 PM CET, or the 14th of June, to be precise. And make sure you grab yourself an account before this promo ends. So I do hope you have a lovely weekend and also a profitable week moving forward. And happy trading.